All right, guys, we had another good day in the market. It was still up and down in the morning, but decided to continue to go up. S&P 500 did a great job. I believe it's up in new highs. Let's take a look at how my account did, go over some of my trades. Let's get into it. All right, guys, so you can see right here, I'm up at $19,200 at the end of today. I use a screenshot just because it resets on futures after around like 4:30 or so. So I went ahead and decided to take screenshots so I can capture the end of the day. I'm up $430 on the day as well. I have some concerns though with corn and soybeans, and Tesla is doing pretty good. We'll go over that. And the S&P 500, you can see I'm up $300 on the day with my 30-20-10 strategy. So let's dive into the details and look at the trades that I made. All right, so I closed my micro E-mini S&P 500 strangle. It was close to 21 days, not quite, but I had a feeling that the market was going to shoot up today. So I was like, well, I'm just going to go ahead and close the position, take my $100 profit, and move on. And that's exactly what I did. And I think I made a good decision here. You can see that my put was at 51.20 and my call was at 5,340. And the stock market is up in those levels right now. And then you can see here, I did my regular 30-20-10 strategy here. So we'll go into the details on that here in just a minute. So I had a call that I was selling at 53.40. You can see just how close the price is getting. And I was up $100 and I thought, instead of messing with it, I'm just going to go ahead and close the position. Really what I planned on doing was really test out the strangle strategy here, test the adjustments. But with it being so close to 21 days, I think the best decision for me was not to make an adjustment, but just to go ahead and close the position. Because then I had to make the decision of, am I going to just roll this in the current situation, or do I just close it and then look for another opportunity? I decided to go with the latter just for the ease of it. Instead of trying to roll it in a later time and adjust the put and call, just go ahead and close it for the profit that I have and move on. Then you can see here with my 30-20-10 strategy, I did the 30-day expiration with a 51.40 put and the $10 spread. And right now it's at 18 delta, which is really good. I had it at 20 this morning and it shot up from there. So really good signs. I like to see red here because that means that I'm going to be making some money. So you can see I've only got a few more days here, maybe a couple more weeks, and then I'll be clear. I'll be able to start closing positions here and putting them back up at the 30 days. And so the position will be complete. I won't be adding any new money to it. I'm going to let the profits grow and then add contracts as I get more profit. So I'm thinking as I grow about $500 in profit, I'm going to turn that into another contract. So that's my game plan with that so far. It could end up being $400. Either way, you'll be able to see it as I add contracts and just see how many contracts I can do and how often. So I've got some concerns with corn. Again, we're seeing the price go down. My position, my put that I'm selling is at $415 right here in this line. So I still have some wiggle room, but it is concerning. And I believe that the call that I'm selling is at 450. Let me check here. 470. So I'm at 470 right here. And so I could potentially move my call down, but I'm just letting it ride, letting it do its thing. And this might be the opportunity here where I have to make the adjustment to stay profitable. So you might be seeing me move my call up toward the price just to be safe, trying to make those adjustments because I don't see any letting up here in corn. The other thing I was thinking about too is the money that I'm making on soybeans. I may be able to just close both of those positions flat or maybe a small loss, just close both of them, get out of the positions and move on to something else other than corn and soy right now. We'll see. I like soy right now. It's not really, it's kind of staying where I want it to stay. As long as it doesn't go any lower, I should be okay. But really want to keep my eye on corn because the price is dropping. That's something that I'm going to be giving you updates on every day just for that reason. Where is the bottom to this thing? I really have no idea. We have a bottom right here. We can see some support in this range here around the 427. So that's what's really got me waiting to test before I make any adjustments is it going to drop below this support level here? So around $424, we should be able to see the price flatten out there at least for a little while, and it'll decide what it's going to do. Is it going to go up from here after the resistance level? Is it going to stay where it's at? If it starts going down below that, I really need to start deciding on adjusting that 470 call that I've got right now just to collect premium. And just in case it does go past my put, then I'll be able to have some kind of strategy with using the credit and going from there. So my understanding with the adjustments is you want to collect as much credit as you can, as much premium as you can, and make those adjustments early. So that's kind of what I'm going for. I just don't want to get whipsawed the price to jump up on my call. And now I've got to adjust my put that I'm selling. So just got to be careful with that. I want to keep enough space, be as passive as I can, let the trade work out as it should. That's exactly what my plan was, to trade inside this zone, let the price float within this zone, and then I'll act accordingly if it doesn't. So we'll see what happens with corn. Now we have Tesla here. Looking at the chart, it did dip after we had this kind of ugly looking candle here. If you're wanting the price to go up, it was an ugly candle, but the price stayed the same. It went down, it touched the ADMA, it came back up, and now it's still staying around the 21 moving average here. What we want to be able to see is to hold this level and continue to push up toward the 50 moving average. So that's what I'm hoping for. We can get up here, and there's a good chance. I mean, we could see 200s, and that's where I made my trade. The price was around $200, and that's where I made my put spreads here. So if it makes it up to that level, I should be in pretty good shape. I think that I'll be able to close out of the position if I'm around $200. We'll just see what happens. One of my positions is very close to needing to be managed. So I've got 23 days here. The 180 put spread here will need to be rolled out in time because we're getting close to 21 days. So I would say probably maybe tomorrow I'll be rolling this out into around 45 days because we do have the holiday coming up on Friday. So Good Friday, the markets will be closed. So just keep that in mind if you're looking to close a trade at the end of the week. The end of the week this week is Thursday, so be careful with that. I also want to show you my copper position right now. It's a 382 put and a 423 call, and it's a strangle here. Just in the last day, right? Just in the last couple of days that I've had this position open, I'm up $68.75. And in the time that I've traded copper, this is my second trade that I've done on it, I'm up $656 for the year. So really big return here on copper. It helped me understand more about volatility. So copper has been really good. We can see the volatility rating. The implied volatility rating is at 67.2, and it was before around 84, 94. So we can see it's still gradually going down. That's good to see, especially if you already have your position on. So that's my plan, is to go ahead, get that IV rank, to continue to go down where it's at, and let the price fall, and I can collect the 50% return that I want out of copper. So it's been really good. Really like what I see out of copper. Not sure if we're going to continue to see that IVR on copper right now, but that's the opportunities that I'm looking for doing the strangle strategy, is high IVR and it contracts over time. That collects a good theta. So before it was around 45, now it's at 39. So the theta, the decay, the time decay is going down, and I'm able to collect more value out of those positions as the value decays. So everything's looking really good on copper, and the price is staying the same here, right? It's flattening out. We had this big volatility move, and then so the implied volatility was responding to that, and now it's starting to die down. You can see the price is starting to stabilize here. So really good to see. That's what you want to see in a strangle move. So really good move there. I'm glad I opened up another trade on there. So I'm a new options trader. My goal is to get a 50% return by the end of this year. So far, we're on really good track for that, as long as I can continue to make money and not have any big losses. So looking really good so far. If you're interested in joining me on my journey to a 50% return in this account, hit the subscribe button. And if this video was a help to you, hit the like button, and we'll see you in the next video.